Hello traders, this is Anthony. Welcome back to this video today. So if you are new maybe to our channel, kindly I urge you to take like 5 seconds of your time. You click that subscription button and also make sure you have liked this video so that you can reach more uh, traders like you. So in today's video, we are going to do the top-down analysis on some pairs or some pairs that I'm watching for the coming week. Today is on Sunday. And in every weekend as a trader, you are supposed to do some analysis so you get ready for a new week. So I have some few pairs with me today that I would like us to do the analysis together. So without a further ado, let's come down to our video. So the first pair that we are going to look at is the GBPJPY, and we are going to do our analysis starting from the daily time frame. As you can see on my chart, we are on the daily time frame, and this is our chart. So basically, if we just look at this chart, you can see very clearly that the market is trending to the upside, or in other words, we are in a bullish trend. Remember the higher time frames? The reason we go to the higher time frame is for us to get the narrative on which area the market is trending to. And basically, as you can see here, we are basically on an uptrend. Now, how do we mark our how do we analyze our market? It's very easy, and for me, I like to concentrate on the recently. What is the market doing recently? And from what I can see here from the daily time frame, I can see that this is a valid break of structure. This is a valid break of structure. If you don't know how to identify a valid break of structure, maybe I will make a video on how to identify a valid break of structure. Because from what I can see here, this is not a valid break of structure. This is not a valid break of structure. But I know from the textbook teaches that uh, when we are an uptrend, this is how the market moves. This is how the textbook teaches us that when the market breaks this previous high, now this becomes a break of structure. But in the real market, that is not how I personally I identify a break of structure. So for me, this is how I identify a break of structure. But I will make a video on details on how I identify a valid break of structure, because this is what I want to see. I want to see liquidity grabbed, then the market goes to the upside and breaks the structure like this. Then we have an inducement here. Then we see a market moving to the downside like this. Maybe we can have a minor inducement here like this. Then we have a break of structure like this. Maybe like this. So now for me, this is how I identify valid break of structure. First of all, I want to see an inducement, or in other words, I want to see a sweep of liquidity like this. Maybe that was our liquidity, or maybe I can call it an inducement. Basically, for those who don't know what an inducement means, an inducement simply means a trap or a stop losses. This is where the market sets trap for those retail traders that like to just to jump into the market without a context. So if you know or if you can identify the inducement, then now you are very much good to go, because this is what I want to see. Because for me, this is not a valid break of structure. This becomes my inducement. Don't worry, I will make a video explaining what is an inducement, what is a major liquidity, what is a minor liquidity. So don't worry, I'll make another video explaining that. So you can see here we have this now becomes a valid break of structure. This is a valid break of structure. Then also this is also a valid break of structure. Sorry, that's a valid break of structure. But for me, this is what I call a fake break of structure. So this is a fake break of structure. The reason Why I'm calling this breakout structure? Because it has not swept any liquidity before going to break this previous high. So for instance, like this one, you can see this high here went down and swept liquidity below this previous low. Now, this is what you call an inducement. After that, you can see market went ahead and broke structure to the upside. Now, this is what I call the valid breakout structure. But for this pullback here, never swept any liquidity in this uh, impulsive move. So now this becomes an inducement. So later on, I'm expecting the market to come and sweep this liquidity here, and this is what I call the major liquidity, our major inducement, or maybe you can call the major liquidity, whichever the case. So this is a major inducement. Reason being, the major inducement is formed after the break of structure or the change of character, while the minor inducement is formed before the break of structure. For example, like here, you can see here the market went up, pulled back. This is what you call a minor inducement. Went up again, never broke the structure, pulled down. This is also a minor inducement. Then pushed up and broke the structure here. So this becomes a valid break of structure since it has swept a major inducement on this area. Now you can see here, market pushed up here like this and broke the structure here. Now take like 2 seconds of your time and tell me, is it a valid break of structure or invalid break of structure? For me, if you have said this is a fake break of structure, then you are correct. Simply because this breakout structure never swept any liquidity within this impulsive move. If, for instance, it had swept liquidity below this low here, then now you could have said, now this becomes a valid breakout structure. That's why you can see the market had to come back, sweep this major liquidity, this minor and also this minor liquidity, then reacted from maybe a point of interest. It can be a fair value gap, it can be an order block, it can be a breaker block, whichever the case. Then now you can see now a push to the upside. Now that you know how to identify a valid breakout structure or uh, a fake breakout structure, so maybe I can try to push this one downside like this. Now that you know how to identify a valid breakout structure and invalid or a fake breakout structure, now let's analyze this chart together here. Maybe let's start from this area. Now you can see here we had a break of structure. At this point, you see there is a break of structure. But within this leg, can you see any liquidity? No, there was no liquidity in this leg. So for me, this is not a valid break of structure. What about this? You can see here market went ahead and broke structure at this area. Do we see after breaking the structure, maybe let me mark, can see very clearly market broke structure at this area. You can see also break of structure. After that break of structure, this is the first what do you call, this is the first pullback that you can see after the break of structure. So this becomes our major inducement. So this is our major inducement. So this law will act as our inducement. Inducement, yeah. That law will act as our inducement. What do you see? Market went ahead and broke the structure at this point. After this break of structure, do we see a pullback? Yes, you can see this pullback. Did this pullback sweep any liquidity? Not really. So also, this becomes what? Another major inducement. So this is also an inducement. This is also our second inducement or major inducement. So now, this also, it's not a valid break of structure, guys. This is not a valid break of structure for me. This is what we call a fake break of structure. That a fake break of structure since it didn't sweep any liquidity before going to the upside. So after this break of structure, you can see we had small pullback. Then market went ahead and swept liquidity above this high. Then now, what do we see, guys? What do we see? Then market had to come down and sweep this liquidity down here. Very nicely, you can see market came down and swept liquidity below this major inducement or below this low. Now, after sweeping this inducement or after sweeping this liquidity, it went ahead and broke structure to the upside. Then now that by market sweeping this inducement and going up to break the structure, then validate this one to be a valid break of structure as I have illustrated in this chart. We have to see inducement, market sweeping the inducement, then going up to break the structure. After that, we need to see market creating an inducement. Then after that, going up to break the structure to the upside. Then now this one becomes our inducement. So sometimes market can form something of this sort. Then market creates what you call the minor inducement, another minor inducement, then breaks the structure. After breaking the structure, it goes down without creating a major inducement, then sweeps maybe this minor or this minor inducement, then after that, break the structure. If that one happens, also, it's fine. It will be a valid break of structure, no problem. But the point is that if you don't see inducement, if the market does not create an inducement, or there is no sweep of liquidity before going to break the structure, then that one, don't validate that one to be your break of structure. For me, if I don't see that, then there is no need for me to trade because I simply know that that setup will be a low probability setup for me. So I will rather not concentrate to trade on that pair. There are so many pairs that you can trade, guys. So, and I can guarantee you, if you train your eyes on how to identify this valid break of structure, where is an inducement, then I can guarantee you that you will be a profitable trader. Now that you know that, let's now analyze our chart. Yeah, you can see here, this is our inducement, the major inducement. Market has swept that liquidity and it has gone ahead and done what? Broke the structure to the upside. Immediately you see this now. Now here we have a problem because there is no liquidity here. Do you see any liquidity? There is no liquidity that is created here. So I'm expecting the market maybe to push up maybe and broke the structure here to create an inducement like that, or market can come down here to a point of interest. Then if market goes down to a point of interest maybe here, then now I'm expecting to see a confirmation before taking a buy setup. Are you getting? Because here we can't see any liquidity that was created here. There is no any minor inducement or something here. So after marking your point of interest, wait for the market to come to a point of interest, then wait for your confirmation before taking a buy to the upside. Because maybe market can decide to come lower here, but I don't expect the market to come and break this low simply because this is our strong low. If the market breaks this low with a candle, then that means this trend it's over and the market is willing to push down to the downside. I'm getting the point. So now let's go to the next point whereby, or the next step whereby now we are going to mark our PO highs. What are our PO highs? So first of all, I like to pick my Fibonacci tool, place from the swing high to the swing low, like this. Then mark the point of interest that are below the 50%. And this is our 50% of the Fibonacci tool, because we know above 50 here, this is where we have a premium, and this is where we have the discount. We want to sell when we want to buy when the value is low, and we want to sell when the value is high. That is the logic here. Now, what do we have below the 50%? Simply, you can see here we have a very nice fair value gap at this point. So for me, I'll mark this candle here as my order block. This candle here becomes my order block, and this is what I call a demand zone. So that is my order block. The last candle before the creation of a fair value gap, that becomes my order block, because I can see down here there is no any fair value gap. Can you see any fair value gap? No. So this is the last candle that was printed before this fair value gap. So this candle now becomes my demand zone. And this demand zone of mine is very strong simply because it is in confluence with this inverse fair value gap. Can you see that? I believe you know what is an inverse fair value gap. When we were pushing to the downside, market created this fair value gap. So after creating this fair value gap, we expect when the market comes back to this fair value gap, we're expecting this fair value gap to hold the market and push to the downside. But this fair value gap never did so. So the market went through our fair value gap. So after going through our fair value gap, now this fair value gap becomes an inverse fair value gap. So that inverse fair value gap is in confluence with this order block. So now this pure high of mine becomes very strong point of interest. So I'm expected to see a reaction at this area. Are you getting? So I'm still expecting the market to sell to this area. Now, are we going to wait the market to come up to this area for us to take a trade? No. So now that simply means we are going down to the lower time frame and try to analyze the market and see what the market is doing. So here you can see here this is the area that we need a break of structure. Now let me go down to the lower time frame, that is 1 hour time frame, and show you something. Now if we try to analyze the market from this time frame, is this clear what I wanted to see? Maybe let me go down 30 minutes time frame and try to check whether what I'm trying to explain is currently visible. Yeah. After that break of structure, what do we see here, guys? You see this push to the upside, we had a pullback, then the market went ahead and broke structure at this area. After this break of structure, this is a fake break of structure, guys. From what we have learned from our illustration, this is a fake break of structure. Why? Because it never swept any liquidity in this area. So now this low becomes an inducement. So you can see the market came down, swept liquidity below this low, then went ahead, pushed to the upside and broke the structure. Now this low, we have an inducement here. This becomes an inducement. After market sweeping this inducement, went ahead and broke the structure to the upside. So what does that one mean? This means it is a very strong low and this is a very strong high. So what happens after that? You see the market went ahead and broke our strong low. When now the market broke this strong low, this now is a valid change of character, or you can call it a market structure shift. This is a valid change of character. Now, after this change of character, what do we see? This is the first major liquidity or major inducement that was created here. This is the first pullback, market push to the downside. So this becomes a first inducement. This is also another inducement. But here I caught a very nice setup here. Let me show you. I think the setup was 15 minutes time frame. I want to show you how powerful this strategy is if you master it. You see, this is the first break of structure. Was a fake break of structure. Market pushed to the downside, cleared this inducement or this liquidity, pushed to the upside and broke structure at this point. After that, market went ahead and broke this strong low. After breaking this strong low, you can see very clearly, we have said from the 30 minutes time frame, this is a major liquidity. We also have a minor liquidity or minor inducement at this point. And at this point, Market never swept this high. Can you see? Market never swept this high. Instead, it left what we call the equal highs. You see, market left liquidity at this area. You see, this becomes very nice liquidity. There are a lot of stop losses on this above this high. So above any equal highs, any trend line. So we see here there is liquidity at that area. And above that liquidity, what do we see, guys? We have a very nice order block or supply zone. You see this kind of here. This is a supply zone. It's not mitigated yet, sorry. So that is my supply zone like that. You see? And even after the market created this liquidity on this area, it never went down and broke this low. Can you see? This was an inducement. Market left an inducement at this area, tried to push to the downside, but never broke this low. You see? It went to the upside. Now, what did the market do after coming to this area now? You see? After the market mitigated, cleared the liquidity above this equal loss, it traded to this order block on the 15 minutes time frame. Then after that, what do you see? The market pushed and broke the structure to the downside. So this was my clean POI. So this is where I placed my order like that. And this now is your checklist. First of all, I want to see an inducement. After an inducement, market pushed to the upside, broke the structure. Then after that, it went down and it did what? Break the structure to the downside, or in other words, change the character. After that, you want to see an inducement. First of all, whenever I see the break of structure, then now first thing I want to see where is inducement, because if you don't see an inducement, then you yourself will become an inducement, or you yourself will become the liquidity. If you cannot identify the liquidity, then you yourself will know very well you are the liquidity. After this, you see this liquidity, and then we have this major liquidity that was created above here. So I knew very well, and the reason why I knew the market will come to this point of interest here, or it will come back and push to the upside here and clear this liquidity, is this reason here. Market pushed to the downside but never broke the low here. So I knew very well that market had to push back and mitigate this order block that was left here. So this was a very clean area to take a trade. And for me, the first target was this low here, because I don't see any other liquidity here. This is the only place whereby we have the liquidity at this area. The market pushed to this side, and this was my first target. Then the second target was down here, because I don't see any reason why the market will fail to come and break this low here. But if I'm being honest, I never waited for the market to come all the way down here. This is where I took all my profits. First target, I have a fixed risk to reward, that is 1:3. So my first target was around here, 1:3. Then the second target was around here. But now let's say someone could have held this trade up to this area. What you see, you could have packed how many risks to reward? 12.59, guys. This is crazy. 12 risk to reward. 12 R. That is crazy, guys. If you can just, you see how powerful this strategy is. If you can just train yourself how to see these things, then I can absolutely tell you will be profitable. So that was it. So after that, that was the trade. You can see very well it went very clean and broke the structure to the downside. So let me now go to the 1 hour time frame. Because now this area, now we have seen we have a break of structure here, a change of character, that is. Then after that, we have a break of structure. After this break of structure, where do you see inducement? That is the first question you should ask yourself. Where is the liquidity? So for me, Market never created a major inducement, but you can see we have a minor inducement at this area. So this is my first minor inducement. We also have another equal highs, guys, here. The same thing is happening on this setup here. Market left these two equal highs at this area. We have equal highs. That is simply liquidity. So above here, what can you see, guys? We have this nice order block here. Can you see the last bullish candle before this bearish movement? You see, there is a very nice order block at this area. We have that very nice order block like that, or you can call it supply zone. So maybe let me change this one to mitigated because the market has already used this. So this is my setup on the GBPJPY. I'm still bearish on GBPJPY, although on the higher time frame we are bullish. But the market never came to the 50% of our Fibonacci retracement. So I'm still expecting the market to push here. Then from here now we can take a sell. You target these lows down there. So this is my setup. This is my setup. You take a sell from this order block like this. Stop loss above. Always give market some breathing. Don't be that jealous. Just set your stop losses some few pips above your order block, or maybe your pure high. Then the first target should be 1:3. Then now you can decide to hold to this low down here. You can see this setup will be like 7.68, 0.65 raised to 1. These are very nice setup. So that is what I'm watching currently on GBPJPY. So let me go to the next pair that I'm watching. So here I have the Euro USD. I have the Euro USD. As usual, let us start from the daily. Let us start from the daily time frame. So let me clean my charts. Let me clean my charts. And we do the analysis together. Sorry for that. So what can we see here? Here we had a break of structure at this point. You can bear with me. Let me start down here. Let me start down here. Here you can see here we had this market came pushed to the upside. We had an pullback, pushed to the upside, swept the liquidity above this high, then went down and cleared this low here. So this low now becomes our inducement. This low here becomes our inducement. After clearing this inducement, we see a break of structure. So now that means this is a valid break of structure. We together up to that point. Then market came down to this order block, then pushed to the upside. For me, this is not a valid break of structure. Why is that? Yeah, after this break of structure here, let us see. After this break of structure, market went ahead and broke the structure here. So this is also a valid break of structure. So we have a valid break of structure here. After that, market created an inducement here. Can you see? This is an inducement. This is a fake break of structure because never swept any liquidity within this leg. This is the first inducement that was created. So this becomes a major inducement. So this is a major inducement. So you can see market came all the way down here to this order block. Then from there to push to the upside and broke the structure here. So this becomes a valid break of structure. You see, guys, it is very easy if you train your eyes to see these things. So this, for me, is not a valid break of structure. This is an inducement. So this is a fake BOS. because market never swept any liquidity before pushing to the upside. So now this becomes my inducement. This becomes an inducement. And what can you see, guys, here? After the market cleared this inducement, then what do you see? It started pushing to the upside. Now, this is the last break of structure that I can identify in the daily time frame. Did the market come to the 50%? Let us check from the Fibonacci tool. Less from the swing high to the swing low perfectly. Market has already traded to the 50%. So what does that one mean? That means now market can push to the upside and break this high on top here. Market now can go and break this high that you can see around here. Now that we have that context, we can go down to the lower time frame, check whether we can have any setup from the lower time frame. Now, if I can analyze here the market here on the 4-hour time frame, let us check. Let's do our analysis together. So simply here, I don't see anything interesting in the 4-hour time frame. Let me go down to the time frame. So I want to analyze the market from this area. I want to see, are we ready to go bullish or we are still bearish? Now, if I analyze this market from this area, what can we see here, guys? We see the market pushed up, pushed down, pushed up, pushed down, failed to break this low, pushed to the downside, swept liquidity below this low, then pushed up and broke the structure around this area. You have a break of structure here. Now this becomes a valid break of structure. This is a valid break of structure. Let me use the different color since we are in the lower time frame. Market swept liquidity here. So this is our inducement. That is our inducement. Market pushed down. After this break of structure, you can see here we have a minor inducement. So this is a minor inducement, and this area, that is a minor inducement. So market had to push down, clear this liquidity, then it reacted on this order block here, then push to the upside. So this becomes our valid break of structure. So this is a valid break of structure. After that valid break of structure, what can we see here? This is the major inducement. This is the first inducement that was created here. So this is the major inducement. So this is also an inducement. That is an inducement. So now what were we expecting? Now this becomes a very strong low. This is a strong high. This is the strong low. Where is that low? The last low. This low. What can we see here? You can see this order block has already been mitigated by this low. So the only order block that we had here is this candle here. This is our last order block. And you see how this strategy is very powerful. After the market came to this low here, this tried to push to the upside. So this order block tried to push the market to the upside, but eventually market came down and changed the character in this low. So if I can identify when, this is where we have a change of character. This is where we have a change of character. So another point to put across here, whenever the market breaks the external structure, remember whatever is inside here, this is internal structure. Whenever the market breaks the external structure, now whatever was inside here becomes the liquidity. Are you getting? So whenever we head here becomes the liquidity. Now, if I can try to analyze this chart from this point, so what can we see here? Because Because you can see after this break of structure, we had first push to the upside. Market never broke the structure. You see here we have a break of structure at this point. This is our inducement, guys. This is a fake break of structure. This is our inducement. This is a fake break of structure. I don't know whether you are getting it. Simply because if this law could have gone to the downside here and swept liquidity before pushing and clearing this eye here, then now we could have said this is a valid break of structure. But the market never pushed to the downside here. See, the only place that you can have the sweep of liquidity is within this law. Then this pullback never swept any liquidity. Market pushed down again, swept this low, pushed up but never cleared this liquidity, then pushed to the downside. Then this becomes a fake BOS. This is our inducement. Now, within this push to the downside, we have to identify where is liquidity, which is the POI that was never mitigated. And if I can see very clearly, we have a very nice order block here, which has swept liquidity, then pushed to the downside like this and broke this low. So this order block was never mitigated like this. So this is my supply or my order block. I want to explain to you how powerful this strategy is if you can if you backtest it well. Always make sure you backtest your strategy before monetizing it. So if we extend this POI very clearly, what can you see, guys? What can you see, guys? This how powerful this strategy is. Market did what? After coming to this POI, what did we see? Market reacted from this order block and then pushed and broke the structure down here very clearly. Now here, this is where we have another break of structure. This is where we have another break of structure. Now this one can change and say this one has been mitigated very clearly, very clearly. Now, what do we have here? What do we have here? Let us check whether we have any valid break of structure. This one is not a valid break structure, then that means it's an inducement. This eye never swept this eye here, and this pullback never swept any liquidity. So this becomes an inducement. This is also an inducement. This is also an inducement, and this is also an inducement. So all this becomes an inducement. That's why you can see after the market cleared this inducement that we marked here on the daily time frame, don't forget, market pushed to the upside, and all those internal structures become what? Becomes an inducement. Now, what can we mark here as our point of interest? Really? So this area now, this order flow becomes my supply zone. So this becomes my supply zone. Let us extend and check whether the market has reacted to this area. So maybe let me go to our time frame and mark that area well. Now like that before our time frame. What can we see here on forward time frame? Yeah, the last candle before this one, or you can mark this way. The last bullish candle before the bearish movement to the downside. And see the market has mitigated this area. Now, this is what I have on Euro USD now. So until the market break this eye, until the market breaks this eye, I'm still bearish. Are you getting? Because I can see this is the last break of structure that was printed here. So until the market breaks this eye, we are still bearish as far as I'm concerned, or as far as my strategy or the analysis that I normally do. So we are still bearish. So if the market fails to break this eye, then I will be looking for sales like this. But if the market breaks this high here now, then simply means I will be looking for the buys. And where will I buy from? Following the order flow, this is the last uh, order flow that I can identify here. This is the last demand zone. Sorry, this is a demand zone. This is the last push to the upside before the push to the downside below before the push to the upside. But this demand zone is not yet valid until the market breaks up here. If the market does not break this high, then this demand zone is not valid. Are we getting up to that point? So this is what I have on the Euro USD. So when the market opens today at the midnight, or maybe tomorrow, today at the midnight, tomorrow, during my session, then I will be looking for a good change of character within this area. If I fail to get a change of character, then now I will wait and see whether the market will break this strong high. This is a very strong high because it has swept all these internal structures here. You see, all these highs here became the liquidity. So the market has swept all that before breaking the structure. So these are very strong high. If the market fails to break that, then I will be looking for a sell from this area. So that is what I have on the Euro USD. And maybe the last one, we can look at USDJPY. Look at the USDJPY. And for this pair, I will just be very quick because of the time. I can see we have already used up a lot of time. So what do I have here on the USD? I'm not going to delete whatever I have here, but I will just explain to you what is happening here on the Euro USD, on the GBP JPY. So let me concentrate on this area. Now you can see here we had a break of structure. This break of structure is simply a valid break of structure because they swept this low before going and breaking this high. After that, you can see here we had another break of structure at this point. We had another break of structure, but from what we have learned, is this break of structure valid break of structure? No, simply because it has not swept any liquidity before going to break this structure. And the only liquidity here is this inducement low here, this minor inducement. So market push to the downside, failed to break this low. So for me now this becomes liquidity. This becomes liquidity. So this is my pure high from the daily time frame because down here we don't see any order block with a fair value gap. The only order block is this one. So this is my demand zone. But now, do we have to wait the market to come all the way here for us to take a trade? No. Let us go down to the 4-hour time frame and check what the market is doing right there. So this is our fake break of structure or BOS, simply because never swept any. Because for me, this is not a valid pullback. This is not a valid pullback. I've recently made a video on a valid pullback. So if you've watched that video, you can see that this is not a valid pullback. This is not a valid pullback. But for this one, it's a valid pullback. So market never swept liquidity below this low. So I'm still expecting in near future, market will come and clear this liquidity and then trade to this low, and from here I can take my trade from there. But from what I can see right here, there is something interesting that is happening currently. See, this is a valid break of structure because you can see we saw there is a minor break of structure here. Market pushed to the upside, cleared this inducement, then after that pushed to the downside and broke the structure here. So this is a very valid break of structure. So this was my high, strong high. This was my strong low. But on Friday, Yeah, I think on Friday. Yeah, I think on Friday or Thursday. Yeah, on Friday, market went ahead and violated this strong high. Then now here we have a market structure shift. After this market structure shift, where do we see liquidity? In this push to the upside, this was the liquidity and this was liquidity low. So these two lows here became our inducement. Then this one, I had marked this one as my demand zone. So that becomes my demand zone. And you can see on Friday, we had a very strong news. You can see market traded to this order block, and you can see here we are having reaction from there. But am I going to take an aggressive entry? No, not really. So now we push down to the 15 minutes time frame and wait for the confirmation from this time frame. So for me, this is not a valid break of structure, guys. This is not a valid change of character. Don't be induced by the market. This is not a valid break of structure. So what I'm expecting to see here, I'm expecting to see something of this sort. Push, push up, clearing of this liquidity, and then now I see a valid change of character at this point. Then now I will take my trade from this area like this. So this becomes my inducement. This is my inducement like this. That becomes my inducement. Then after that, you have a change of character at this point. Change of character. Then now, from the rules of my entry confirmation, I normally would like to pick a few. I measure, then I take my trade at the 50% of the Fibonacci retracement tool like this. If I don't see any valid POIs, if I cannot see any interesting POI here, this is how I take my entries like this. Stop loss below this low. Then now I will target either this. If this high gives me a good risk to reward, then I will target that. If it doesn't, then as always, I take 1:3 as my fixed risk to reward. So this is what I'm expecting here on the GBPJPY, USDJPY, sorry. So I'm expecting a push to the downside to clear this equal loss. You can see here simply market never swept this low here. It left equal loss here. So that is liquidity. Market left liquidity down there. So I'm expecting the push to the downside, clearing this liquidity. Then after that, I see a break to the upside or a change of character, then now I'll be happy to take the trade. If I don't see this setup, then now simply means what? I stay the hell away from this trade. As simple as that. If I don't see that, then I will not take the trade. Or maybe market can fail to give us that one. But up here on the continuation, if I see a nice setup, then I will take a trade in the continuation. If the continuation never gives us the nice setup, then now there is no trade for me. But for now, that is the setup that I'm having on USDJPY. So guys, that is it on our top-down analysis today. We have analyzed the repairs. So I'm also having a setup on Geo, but because of time, I'm not going to show you that. Maybe I can just briefly show you how the setup looks like. You have a market structure shift. This is my POI. So the same setup, I'm expecting to see a good nice change of character here. Then I will take myself from there. But for the pairs that we have analyzed, we have the Euro USD. We have I also have another setup on gold, but I'll make another video to show you that. So today we have analyzed USD, GBP, JPY, and Euro USD. So I would like to stop at that point. So as a reminder, guys, if you are new, please consider to subscribe. Just take 5 seconds of your time. Show me, uh, motivate me by just, the only way you can motivate me, guys, is only by clicking the subscription button. Make sure you like the video so that you can recommend this video to more traders and get informed to learn something from this video. So I wish to stop at that point. So see you in the next video. So on Wednesday, sorry, on Wednesday, I will make another video just to update what has happened. Maybe tomorrow and also on Tuesday. So I'll have an update on Wednesday, and that's where I will do analysis on gold guide. So thank you for watching. See you in the next video. Bye bye.